Ladies and gentlemen, welcome to the special interview. Today we have a returning guest to the show, Simon Popple of Brookville Capital. Simon writes the Brookville Capital newsletter, which is a weekly publication. And not only is he looking at individual gold and silver mining companies and analyzing them, but he's also teaching his system for how you too can analyze gold and silver mining companies. Simon, I'd like to thank you for returning again to Silver Doctors.
Great to be here.
Now, Simon, before we take a deep dive into gold and silver in the mining sector here, I got to know, because it's been going on 4 years now. And, 4 years ago, still to this day, the biggest one-day move we've had in gold was when the Brexit referendum was held in June of 2016. So now we are sitting here in 2020. What is going on with Brexit? Is Brexit going on this year? Is it not going on this year? Or could you give an update on that before we start here, Simon?
Yeah, no, sure. Well, I mean, Boris got a majority, I think it's about 80 seats. So, and his sort of plan for Brexit is, I think it's due in front of the EU in the next few days. So, assuming they give it the green light, then we exit at the end of the month, 31st of January, and then there's what they call a period of transition, which is when all the negotiations are going to happen. So the plan is to get a negotiated deal by the year end. Whether or not that happens is anyone's guess, but that's what's meant to happen.
Mm-hmm. That's interesting. Because here everybody's been focused on four things: the stock market that just keeps going up and up and up, and then we're also focused on this U.S.-Iran crisis, the impeachment, and the election. So I didn't realize that there's actually movement this month as well. So that's going to be interesting to watch how that plays out and get your update as the year moves on here. Because one thing I noticed that I just wanted to mention really quickly is I saw an article last week talking about retail sales have declined in the UK over the course of 2019. And I guess, are they talking about that's Brexit related, or could there be other things going on with that? Or what are you seeing as you're out and about and the general assessment of the economy there?
Well, I mean, there's definitely a lot of stores closing. It's difficult to know whether that is because they've come to the end of their lease, and there's a sort of a hike in the rent which they don't want to pay or they can't pay. But I think with the emergence of the internet, everyone is sort of able to to go around a shop, look at something, and then compare the price with well, they can get it on Amazon or something else. And I think this is pretty unfair, to be honest, to the retail sector. They've got rent to pay, and shop assistants and things like that. And so I think they're having a tough time. And not just in the UK. I mean, I think on your side of the pond as well, there's some shopping malls that are struggling, and so it's going to be an interesting time to see how how it's dealt with.
I find that very interesting. I didn't think about the fact that, because there's we hear about like a real estate bubble in London and things like that. So those are a couple of things I didn't even consider there. So thank you for that. Talking about gold and silver here, Simon, when Iran launched a dozen missiles into Iraq last week, the price of gold shot up above $1,600. And it was the first time in many years that we've shot above $1,600. And on the same day, the GDX plummeted. So, I mean, I'm confused here, Simon. Because one of the things that I think is, if gold is spiking above 1,600, you think that the miners are going to get moving here. But we see that they kind of are off to a shaky start to 2020. So just an overall view first, what is your overall assessment of the mining sector, and specifically the gold and silver miners? How are they doing at the start of 2020, Simon?
Well, I mean, it's pretty mixed, to be honest. I think that the producers are generally doing pretty well because, as you say, the gold price has gone up, and therefore, that's obviously good for their top line, and costs, perhaps they've gone up a bit, but nothing like as much as the gold price. So that's sort of good margin expansion for the producers. So, that's obviously good for the share price. And I think that some of the explorers, where they've already found an economic amount of gold, and are looking to sort of build on that to attract more money when they actually develop a mine. I think life's been pretty good for them, but I think life's pretty tough for others who are still exploring and don't actually have anything tangible yet, because they're having to go back to the market to raise more capital. And I think the market perhaps has been a bit more careful than it used to be.
Mm-hmm. And for the viewers and listeners out there, could you explain what the difference between like a producer and an explorer and maybe a junior is?
Yeah, absolutely. Well, I mean, I think this is where you have to be very careful, which is something I focus on a lot in my newsletter. Is that people just view mining, gold companies or silver companies. They don't realize that some are producing, some are exploring, and some are perhaps producing a little but exploring a lot. And you really need to know what you're getting into, because if the gold price goes up, especially for a producer, that's a kind of a double whammy, because on the one hand, that generally means more revenue, because they're making more money, but also in terms of their reserves. With a higher gold price, more reserves, quite often become economic. So, it's not unheard of to have a company, let's say, with 2 million ounces of reserves, but then, the gold price goes up and suddenly they've got 2.5 million ounces of reserves, because, the gold price increase has meant that more reserves have become economic. So, this is the thing the market looks at. They look at not only the amount of cash that these companies are generating, but also what their reserves are, because that gives an indication as to how long this cash is going to be generated for.
Mm-hmm. That's interesting because, for the past several years, we've been talking about how, the miners have just been cutting costs and walking down costs for years due to the bear market that we've been in. But now it sounds like there's some options here with the miners as far as what they can do now that the gold price is rising and they're making a little bit more on the margin. For example, like increasing dividends or mergers and acquisitions, or could you speak a little bit more to that?
Yeah, absolutely. Well, I mean, first of all, let's deal with mergers and acquisitions, because it's becoming more and more difficult to find new economic deposits, and it becomes quite expensive to explore. So I think you saw it last year, but I think it's going to continue this year, where some of the majors are acquiring either mid-tier or junior miners, because they've got a damn good reserve, and it's easier to buy them at pretty cheap prices rather than speculate a whole load of money on exploration that may or may not sort of work out for you.
Mm-hmm.
And then touching on dividends, I mean, dividends is very interesting because essentially the yield on stocks at the moment isn't great. It may be like 1, 2, 2.5, 3, but if you compare that to the yield on bonds, it's actually not that bad. And if the gold price goes up, then it could be a nice generator of income for people, because gold is valuable throughout the world. It's not just something that's valuable in a certain geography. And so if someone's producing gold, the demand is always likely to be there. It's been there for thousands of years. Why stop now? And I think that people who are sort of generating an income via the sale of gold, could do very well.
Mm-hmm. And as far as gold, we've hit $1,600 here. I was reading last week that in gold price in euros also hit another all-time record high. I believe it was last week or the week before. How's the gold price doing in British pound sterling right now?
Yeah, I mean, it's doing pretty well. I mean, I think that because of concerns on fiat currencies, obviously, with sterling, we've got the Brexit issue, but gold is actually performing very well. I mean, it's doing very well in Aussie dollars as well. So, I think that's the other attraction of gold, is that it's almost currency neutral. If you hold gold, then if you sell it, you can choose which currency, more or less, that you exchange it for. So I think that's quite attractive to some people who are perhaps concerned about certain currencies moving forward.
Mm-hmm. One of the things we spoke about last time we had you on the show was just different geographical regions. And, one of the things that you talk about is good geographical regions would be like Canada, the United States, Mexico, Australia. And I keep seeing all these wildfires in Australia. Is there a risk to the mining sector with all of these wildfires that are going on?
I mean, I can't talk about specifics, but I mean, I think quite a lot of the mines, I mean, obviously some are underground anyway, so sort of less likely to be affected. The open pits, I'm not sure where specific fires are relative to the mines, but yes, I mean, it could cause an issue if you've got a fire near you, obviously, but I think it's very much on a sort of asset by asset basis. And quite a lot of these mines are sort of in the middle of nowhere, and the communities are quite self-sufficient as well. So I don't think it's going to be a huge problem. I certainly haven't heard anything sort of in the chatter that it is causing major problems. So I think at the moment it's okay, but let's see what happens.
Yeah, I mean, the good thing is it's not like a cornfield that can go up in a blaze. I mean, it's metal. So if anything, you're just melting it down into the Dorian bars. But you make a good point there on the case-by-case basis, because I'm thinking of some things where, for example, maybe some plant and equipment burns down, but the gold is still there in the ground. So this is recoverable. So this is also why you kind of need to be looking specifically into companies and what might be affecting them at any given moment. So could you just review with us what it is that you look at when you look at companies?
Yeah, no, absolutely. Well, I mean, you mentioned jurisdictions there, and I think that's very important because some places are much safer to invest in mining than others, and certain countries have got a much better track record of mining regulation and taxes and things like that than others. And the worst possible situation for a miner is that they find gold, silver, whatever the commodity is, and then it basically gets appropriated by that country, and they spend all the money and they end up with nothing or very little. So you do need to be careful where you're buying your mining stocks, and that's not to say Africa is bad, but you just need to be quite selective as to where you invest. The same goes perhaps for some parts of South America, and so there's quite a lot of things to look at. I mean, I have a system which I call the bridge system, which stands for the balance sheet, resources, infrastructure, diversity, grade, and exploration potential. And I find this is a useful way of getting people to properly look at a company and carry out some sort of analysis. It's quite easy to remember the term, and at least there are obviously a lot of other criteria to look at, but I think if you cover those 5 points, then you're probably doing more research than most.
Oh, that's very interesting. I look particularly like the I, because it went back with what I said, because the infrastructure, because that's how I was thinking those fires could affect, operations one way or another. But then again, maybe it's not as extreme as far as the fires that I'm thinking that it is. Now, Simon, most analysts are bullish with a bullish outlook this year for gold and silver. But just general, is there a consensus view on the outlook for the miners for 2020? Is it the rising tide lifts all boats, or is there something else here, Simon? You can't just throw a dart up and then make a 10-bagger, is what I'm trying to say.
No. I mean, the market is certainly nowhere near that. I mean, I think at the moment you certainly have to be selective. I mean, I think the bull gold market, there's no reason to think that's going to stop. But at this point, you do need to be selective about what companies you are sort of investing in and looking at. If we end up with a sort of crazy 1970s, early 1980s type bull run, then you're probably getting to your sort of dartboard and a list of mining companies. But we're a long way off that at the moment. So I think some could do very, very well, but yeah, you need to be careful.
Mm-hmm. And just because we're not talking about a dartboard right now, we're talking about selecting and making sure that the right system is put in place to select the good companies. Between the explorers and the producers, the explorers have the potential to really whipsaw and go wild and have a lot of volatility and a lot of upside potential, where the explorers are a little bit more stable. Is that the right way to think about it?
Yes, producers
where the producers are more stable. Yes.
Yeah, no, exactly. Well, yeah, no, I mean that's a good way to analyze it. I mean, I think what I do is I use what I call a fantasy football team, which is probably a strange term for an American, but it's really saying that you've got different types of mining company. And you know, in sort of European parlance, you've got, you know, goalkeepers, which are your very large mining companies, defenders, which are your kind of mid-tier, and then midfielders, which are sort of more sort of news production, and the forwards, your out and out explorers. But you know, you're absolutely right. You know, explorers can take off and go to the moon, but they are very risky as well. So you know, one thing I sort of advocate is having a you know, a broad church of investments. So you know, you have some producers, you have a few explorers, and so if the gold price takes off, then your producers will probably do pretty well. And if your explorers, if one of them finds something major, then you know, they could do extraordinarily well. But you certainly don't want to have all your eggs in one basket.
Mm-hmm. And just to get a couple terms here, we talk about, you know, the explorers and the producers and the juniors and the majors, but just even getting down a little bit more basic than that, I hear things about like a drill hole or grams per ton, or what is some of the terminology that people are going to come across as they're learning about the gold and silver mining sector?
Yeah, I mean, grams per ton is you know, one that's quoted a lot, and it's, I mean, as a real general rule of thumb, you tend to be looking for about a gram a ton if it's going to be an open pit, and then, you know, 3 or 4 grams a ton if it's going to be underground. But
And we're talking about gold here, so this is for
gold. Yeah, exactly. I mean, but that's a real generalist comment, because you've got certain companies. I mean, there's a market leading Australian company that is doing phenomenally well with a lower grade, using some good technology to extract it and make a lot of money. And you know, also, if the geology is wrong, then you know, even at 3-4 grams a ton, if it's difficult to separate the gold from the ore, you know, you may find that you need a higher grade for certain rocks. So that's a very generalist term, and you know, you do need to be a little bit careful when you sort of you look at grade. But you know, that's a good sort of rule of thumb.
Mm-hmm. And this is very interesting. And you break it down weekly. Are you looking at both the explorers and the producers in the Brookville Capital newsletter? Like, what would a weekly issue look like?
Yeah, I mean, people. I offer a clarity call with people, so if they want to talk through it, then you know, a lot of people seem to find that very useful. But we look at both. I mean, as I say, we've got a sort of fancy football type setup. So you know, we look at anything from the really large companies to, you know, some very, very small ones that people are highly unlikely to have heard of. And you know, the whole idea is that people, you know, I'll analyze the company for people, but I want people to learn how to analyze it themselves as well. So you know, they can look at my analysis, but if they want to look at other things, then you know, the door's open for them to do that. But yeah, the whole idea is to have a broad church, so people have a good understanding of the entire sector, and depending on their sort of risk appetite, they can invest in sort of one area or another, or you know, or across the spectrum.
Mm-hmm. And you know, I hear a lot about ETFs, right? Exchange traded funds. So I'm just kind of curious, how do you feel about the ETFs? Like, do you think that some of the ETFs are good, or do you strictly go with selecting individual companies, or how do ETFs fit into this?
No, sure. I mean, it's a very personal view, but I mean, what I like about the mining companies is they're extracting or looking to find you know, physical gold that in most cases have been there for thousands, if not millions of years. And so you know, it's something that's tangible, and your relation, you know, if you invest in a mining stock, your relationship is between, you know, you and them basically. But with ETFs, there are sort of other counterparties, and there's sort of links in the chain, and you know, the whole chain has to perform well, and if it does, you know, they can be a very cost-effective way of getting exposure to gold. But what I like about the miners is, you know, you're getting exposure to physical gold. And my slight concern about, you know, some ETFs is you're getting more of a derivative rather than the actual physical gold. And even though some say you can actually take delivery of physical gold, I think there's 2 points. First of all, you need an awful lot of sort of ETF shares to be allowed to do that. And secondly, most of them have got rules that if for some reason they don't want you to do that, they'll just cash settle you. So I prefer the miners personally.
Yeah, and it sounds interesting because if I'm understanding it correctly, with the ETFs, if it's dependent on several different factors, well, if some of those factors aren't doing too well, then just the ETF could just be, meddling along there and not really doing much. But if you choose the correct individual companies, then you have a lot of potential if the company is doing exceptionally well. Am I understanding that correctly there?
Yeah, I mean, I think a lot depends on how much you're deploying in the sector, because I think it's very important to diversify, and I think that's where ETFs can be very good because they can give you a very wide exposure to the market. But I think that most people they like to invest in the actual companies themselves, and so providing you can invest in a reasonably broad church of companies, you're choosing the companies, not the ETF. And in terms of if it comes to selling, that you're investing in a company that is mining or exploring physical gold and or silver, whatever the case may be, and I get more comfort than that than potentially having to settle through a chain of organizations.
Mm-hmm. Now, Simon, some people think that the Fed can just keep the stock market propped up forever. Other people think it's coming down. My point with that is, a lot of people think that gold and silver could go the inverse of the stock market, which I do. So the stock market's coming down, people are going to hedge against that with gold and silver. So it sounds like whether the stock market keeps going up and we have an inflationary environment, gold and silver can go up as the inflationary aspects of it. But if the stock market comes down, gold and silver could also go up as an anti-stock market play. So could you just, kind of describe a little bit of the difference between, it's different buying the gold and silver mining stocks than just buying stocks on like the S&P 500 or the Dow or something like that, isn't it? And isn't it kind of almost anti-stock market in that sense in and of itself, as it's along with the gold and silver more than it is along with the stock market in general? Because we've seen the stock market going up, but the mining companies have struggled. Am I understanding or thinking about that correctly?
Yeah, I mean, it all depends on sort of the depth of the correction, because quite often, if there's a correction, all stocks get hit, including the mining stocks. But because gold is viewed as a safe haven asset, once you've had perhaps an initial downturn, if you look at what happened in 2008, all stocks went down initially, but then the gold stocks roared back, and silver for that matter as well. But I think that what I find really interesting is a lot of people are looking at gold more as a safe haven asset that perhaps previously haven't looked at it as a safe haven asset. And if you look at what happens normally in a recession, people sort of move from equities into debt, so bonds. But with bonds having a negative yield and potentially high inflation, no one knows. But I mean, let's say we have that. You could find yourself with an instrument that is not yielding much, or maybe even negative, and the capital value is being eroded by inflation. And I think that people won't put all their eggs in the gold basket, but I think people are increasingly thinking, well, perhaps it makes sense to have at least some allocation to gold, and they probably view it as much as insurance as an investment. And I think the difference between gold as insurance and sort of conventional insurance is that normally an insurance policy will expire and will be worth nothing, whereas with gold, if things don't work out for you as a holder of gold, then at least the gold's going to have some value at the end of the day, and you can sell it back. It may be at a loss, but at least you've had the benefit of the sort of insurance, inverted commas, in the meantime.
And Simon, a lot of companies have issued shares over the last several years. A lot of companies have had to go into debt, and all of this had to do with the declining gold and silver prices since 2011. So my question there is, how are the balance sheets now? Are they able to start paying off those debts? What is the financial situation looking like kind of across the board of the miners?
Well, I mean, the companies I look at, I mean, the bridge system, the B is balance sheet. It's one of the first things I look at. And, with higher gold prices, as I said at the top of the show, you do tend to have expanding margins and higher cash flow. So a lot of companies are in a position to, redeem some of their debt, in many cases early. What you need to be very careful of is looking at an explorer that's got debt, because a producer, providing it's only a fraction of their EBITDA or cash flow, it just means that they can, they can pay it off, and they're comfortable paying it off even if the gold price goes down. But an explorer is very different, because an explorer, they still have to pay off their debt, but if they don't find the gold, then they're in big trouble. So you're absolutely right. It's something you need to keep an eye on. But I think since the last sort of gold crash, gold mining companies have been a lot more conservative and careful about their balance sheets. And whilst a few do have what I view as quite high levels of debt, that's not the case for all of them, and some of them are very manageable levels of debt. And I'm not really that concerned about it, to be honest.
Now, we're coming up on earnings seasons here. I don't know if earnings have already been released yet, but they're either starting or they're about to start. But, stocks can move during earnings seasons if earnings come out and they're beating expectations, or what are some of the things you look at when earnings seasons come around? Is it a time where there can be movement and excitement coming into the sector if earnings are looking good? I guess my point there is, are we coming up where we're about to see, is that some of the things you look at is with each of the earnings releases there?
Yeah, I mean, it's obviously very relevant when companies release their results. With mining companies, it's particularly pertinent in terms of whether they are performing in line with expectations, and most of them give a guidance of, for the financial year, of how much gold they expect to produce during that year. And what you tend to find is that if companies are on guidance, then, or they're producing as much as they expect to produce, then the market tends to sort of leave them alone, and their share price, it may go up a bit, but perhaps not that much. If they're ahead of guidance and it looks like they're going to significantly beat guidance, then that could be very good for the share price. But the flip side of that is, if they're underperforming, and bear in mind that some tend to produce perhaps more in the second quarter than the first quarter, or the third or fourth quarter. So, but if they underperform for a quarter, and the market's expecting them to be at one level and they're significantly below that, the shares can get hit very, very hard. So yes, you're right. Earnings season is very relevant, but especially at the year end when they're making their forecast for the next 12 months in terms of their production.
Mm-hmm. And Simon, I'm looking at a copper chart, and I'm seeing copper kind of bottomed out here over the course of the past year. And it looks like we're moving above 280. I would say that the commodities in general bottomed at the end of 2015, the beginning of 2016. But I guess my question is, are you looking at other stocks? Like, are you looking at just gold and silver mining companies, or are you looking at other stocks in the resource sector? And, we're still sitting here with silver in the 80s and the gold to silver ratio in the mid 80s. So I'm also wanting to get your thoughts on silver, because I can't let you go without talking about silver either. So just as far as other mining companies, maybe base metal mining, if you could talk anything to that, and also talk about how your outlook is for silver here, Simon.
Yeah, absolutely. Well, I mean, a lot of the companies I look at, they have an element of, especially the larger ones, that they will have exposure to copper, and indeed silver. They're not all pure gold companies. So yes, you do have to keep an eye on silver and copper. Zinc and lead also crop up quite often. So yes, I do look at the sector, but I'm predominantly looking at gold, because I think that people view gold as one, a safe haven asset, so a way of protecting at least some of their wealth, and also gold is an asset that a lot of people think could go up in value. Some people are talking about dramatic increases in value. So, and even if it goes up a little bit, then if you're in the right shares, you could do pretty well. But yes, I do look at the base metals as well. But my focus tends to be on gold and to perhaps a lesser extent silver.
Mhm. And Simon, for the last question here, just what's going to be on your radar as we move through the first couple months of 2020? What is on your radar the most? What are you looking at the most? And if you could speak to that a little bit.
Yeah, no, sure. I mean, just to properly answer your previous question, I mean, I think silver, a ratio of 80-1. I mean, that is, out of kilter as to where it has been. So I think silver could be in for a very interesting year. And obviously Mexico is the largest producer of silver in the world. So that sort of means that you naturally kind of look to that market. So yeah, I think silver could be in for a good run. I think gold, we're only in sort of early January, but I think gold could go significantly higher than where it is at the moment. And I think there's definitely an appetite for looking at the sector, given the negative yields, and it's going to be quite interesting to see how financial advisors steer their clients towards the sector, and whether they steer their clients towards the sector to at least have a modest holding in the sector. So if things go wrong, then perhaps it could be very good for their clients, and if the gold price goes up, similarly. I just think it makes sense to have a sort of a diversified approach to life.
And you had mentioned earlier that if somebody's interested in learning more, that you'd be more than happy to speak with them. What's the best way that they can contact you, Simon?
What I have on my website, I have something called a clarity call, which is on one of the web pages, a subscribe page. So if they just go in there, they can book an appointment, and we just have a quick chat about what they're looking to do, and we decide whether or not the newsletter is right for them, or they should be looking at something else.
And if you do have an interest in the gold and silver mining sector, you need to give Simon a call. I would highly recommend that. Simon Popple, I'd like to thank you for joining us again on Silver Doctors.
Thanks very much for having me.